Okay, so let us start with our first chapter in CMA Group 2 company accounts, which is basically nothing but issue of shares. Okay, so now let us see what is this chapter speaking about and what are the things we are supposed to cover, right? So here, first issue of shares. So before getting into the accounting part, let us try to understand what are the different types of shares we are having. We know that we are having something called as equity. We know we are also having something called as preference. So equity share capital is one thing, preference share capital is some other thing. Now before proceeding into, we need to understand several terms such as authorized share capital. Authorized share capital is one thing which we need to understand. At the same time, we need to also understand something called as issued share capital. This is other thing which we need to understand. Then there arises something called as subscribed share capital. That's what is the other thing which we should understand. So authorized, issued, subscribed, then comes your called up share capital. Called up share capital, then comes your uncalled share capital. Then there is something called as paid up share capital. Then we are also having something called as unpaid, or even this can be called as calls in areas. Okay, these are the different types of share capitals we are having. Now let us try to understand what are all the categories of share capital. Authorized is something which the company can raise during the lifetime of the company. The company can raise only the share capital which is mentioned in the authorized share capital. That means it is the company with which it is the capital with which the company is registered. Company authorized to raise that share capital is said to be called as authorized share capital. So I can also call capital with which company has been incorporated. That's what is something called as authorized share capital, incorporated, right? Then what is the meaning of issued? Say the company is incorporating itself with, say, suppose 50,000 shares. Okay, let us consider 50,000 shares of 10 rupees each. That means during the lifetime of the company can raise the money 50,000 to 10, 5 lakhs is the authorized share capital. But I don't require the money immediately. I don't require 5 lakhs immediately. Initially, I require only 3 lakhs. What I will do? I will go and issue the shares to the extent of my requirement. That's what is something called as the issued share capital. Say suppose I require only 3 lakhs. Then what I will do? 30,000 shares will be issued at 10 rupees. Thereby, I will be getting what? I will be getting this. One second. 30,000 shares are being issued at 10 rupees. Thereby, I will be getting the requirement amount of 3 lakhs. That means, okay, that's what. So ultimately, that part of the authorized share capital which has been issued. So issued is what? That part of what? Of something called as authorized share capital which has been issued. Is something called as issued share capital. Now 50,000 was your authorized. You are authorized to issue 50,000 shares at 10 rupees each. Now what I had done? I had issued 30,000. What is the guarantee that whatever I issue, the public is taking? Say suppose the public had subscribed only for 20,000 shares. That means the public has taken only 25,000 shares. Ultimately, 2,50,000 is said to be called as what? Subscribed share capital. Authorized capital is nothing but the shares which the company is entitled to issued in the lifetime. Issued share capital is something whatever extent of your authorized capital which you are issuing, and subscribed capital is a part of your issued capital. So subscribed, that part of what? Issued. That part of issued share capital. So subscribed share capital is nothing but that part of share capital which, okay, that part of issued share capital which was subscribed, which were accepted, is said to be called as subscribed. Then total my subscribed share capital is what? 25,000 into 10, 2,50,000 is the money I should receive. Generally, what the company will do? The company will not receive the entire 2,50,000 in one go. What the company do? It will divide the 2,50,000 into some stages. Okay, stages called as application, stages called as allotment, okay, stages called as call. Few cases the company can call the money in one call, or few cases the company may be going for second call, third call, etc., etc. So entire 2,50,000 I won't call you immediately. I will be calling that money in different sort of stages. So we are calling the money in different sort of stages. Say suppose 10 rupees is the face value which we have taken as an example. Of the 10 rupees, let us consider application money is 5 rupees. Application money is 5. That means whenever any person is subscribing, he has to immediately pay 5 rupees. Then allotment 3 rupees means what? Whenever the shares are allotted, that person need to pay 3. Then whenever I call, you are supposed to pay 2 rupees. That's what is entire thing. You are getting the face value as 10 rupees. That's what is the different stages. Now I had received the application money, I had received the allotment money, but I had not called the call money. So what is the money which I had called? 8 rupees. So 8 rupees 8 rupees per share. Like that, how many shares the shareholders has subscribed? 25,000 shares the shareholder has subscribed. So ultimately 22 lakhs is going to be something called as my called up share capital. So ultimately called up share capital is nothing but that part of subscribed share capital. Okay, that part of subscribed share capital which is called is something called as our called up share capital. Hope this is clear. Authorized share capital in the present example I had considered to be 50,000 shares, 10 rupees each. Total amount I have to receive 5 lakhs. Then I won't need the entire money of 5 lakhs immediately in one time. So what I will do, whenever the amount is required, I will go and issue the shares. Like that, initially I want only 3 lakhs. So what I am going to do, I am going to issue shares to the extent of 30,000 at 1 rupee. I will be getting my required amount of 3 lakhs. That's what is called as issued. But whatever amount of shares which I am issuing may not be subscribed. So ultimately subscribed share capital is a part of your issued share capital. So you are subscribing, I am issuing 30, you are subscribing only 25. So ultimately 2,50,000 is something called as subscribed share capital which the shareholders are taking. Now I won't call the money of 10 rupees in one single installment. There are different installments you are having: application, allotment, and call. So depending upon the stages we'll call the money. So whatever stage, whatever amount we called, say in the present example I had called only 5 plus 3, only 8 rupees is called. So ultimately 8 rupees into how many shares? 25,000 shares. That gives you 2 lakhs. So then what is the meaning of uncalled? Uncalled is also that part of subscribed capital which is not called. In the present case, 2 rupees per share is not the amount which is called. So ultimately here uncalled share capital is what? That part of what? Subscribed. That part of subscribed share capital. Okay, that part of subscribed share capital which is not called is something called as uncalled. Then what is the meaning of paid up? There may be a cases where I had called you 8 rupees. I had called you to pay 8 rupees, but you may not be paying 8 rupees. You are paying only 5. So whatever amount called and whatever amount paid, that will be something called as our paid up share capital. So I am calling 8 rupees. In the present case, I am calling 8 rupees, but you are paying me only 5 rupees. So ultimately 3 rupees is something called as my 5 rupees is something called as my paid up share capital. Remaining 3 rupees is something called as my calls in arrears or unpaid capital. Of course, in this case, the word calls in arrears is not apt. We'll discuss that further. So I will call this as what? Unpaid capital. So ultimately, part of subscribe. Okay. So it is nothing but that part of your subscribed share capital subscribed share capital, which is called, or simply speaking, I can call that as what? That part of called up share capital, which is paid. Which is paid is something called as paid up share capital. I'm calling 8 rupees. You are paid only 5 rupees. So the 5 rupees will be something called as what? Your paid up share capital. Then what is your unpaid? 3 rupees unpaid. So ultimately that same case, that part of called up share capital which is not paid is something called as the unpaid share capital. That's what is the terms which we need to understand. Okay, so just quickly take this definitions and this example. So we'll go and see few cases where how the shares are issued. We'll take a few basic examples. With the basic examples, we'll go to the advanced cases and we'll start working with few problems. Okay, so first we'll take basic examples. With the basic examples, I will explain you what are the entries which you are supposed to pass. Then we'll make the same example slightly situation complicated and let us try to see how we can pass the accounting entries. Clear? So just quickly take this on. So ultimately we can go to the next one. Okay, so let us continue. Hope the definition part is clear now. And we also know the stages: application, allotment, call. Now let us take few basic cases where X Limited, okay, X Limited has issued 90,000 shares at 10 rupees each. Okay, X Limited has issued 90,000 shares at 10 rupees each. Okay, then as we know, there are three different stages: application, allotment, call. So these are the three different stages we have. Application money, let us consider the application money to be 4, let us consider the allotment money to be 3, and let us consider the call money to be 2. That's what are the three different situations. So I'm not immediately going to make the situation complicated. So let us consider all the shares the company is issued has been subscribed. So here let me add one thing: subscribe. Shareholders subscribed to 90,000 shares. Okay, going forward, I'll try to explain the situation where there will be some sort of under subscription, where there is some sort of over subscription. Under subscription, there is no particular account treatment, but over subscription, we need to be slightly careful. That we'll discuss at a later stage. First, let us see how do the accounting entries has to be recorded. Clear? Shareholders has subscribed to 90,000 shares. That's it. So that's what is the given situation. Now, how do we tackle this situation? Now, as we know, application. First, what will happen? Shareholders will submit their application. Along with the application, they are supposed to pay 4 rupees. Now, at this stage, what is the amount received by the company? 90,000 shares. Each share 4 rupees. Total you had received how much? 3 lakhs. 60,000 is the total money received. Then what? Company has allotted. Then you are submitting the applications to the company. Then ultimately the company will process the application. If all your KYC documents are being submitted and everything is proper, the company will make an allotment. So ultimately, let us take an assumption: no application was rejected. So ultimately, how many shares I am allotting? 90,000 shares we are allotting. So ultimately, on the 90,000 shares, I should receive something called as 3 rupees per share. Right now, so shares are applied. After due verification, allotment happened. Then ultimately what you are supposed to do? Pay the call money. You are supposed to pay the call money as soon as the company calls for that money. So here 90,000 shares. Each share you are supposed to pay me 2 rupees. So ultimately what is the total which I will be going to receive? Okay. So I will be going to receive, one second, there is something 1,80,000, 36,000. 90,000 into 4, 90,000 into 3, 90,000 into 2. So total put together, yeah, sorry, this should be 3. Okay, this should be 3. So ultimately what? 90,000 into 3. So ultimately what will happen? 9 lakhs. So because my face value is what? My face value is 10. I had to call the 10 rupees in part. Application 4 rupees, allotment 3 rupees, call money also 3 rupees. So that my total is equal to my face value. For total put together is what? 9 lakhs. So I will be receiving 9 lakhs in multiple stages. So your entry should also be passed in the multiple stages. Now, what is the first situation or transaction happening? Application. So here, what is happening? You are you are a shareholder. See, always in whose books you are recording? Not in the shareholders' books. You are recording the entries in the books of the company. So ultimately, you are supposed to think from the perspective of the company. The company is getting cash. So ultimately, as the money is received by the company, what I will do, I'll simply consider bank account will be debited straightforward. Bank account will be debited. To what? What is the purpose for which the money is received? Share application. So you are sending this money on account of something called as share application. So I will simply transfer this money to a share application account. What is the amount there? 3 lakhs 60,000. Share application is going to be 3 lakhs 60,000. Done. Now, ultimately, where this has to be sent? Share capital. So I need to remove this from my application account. I need to put that in a separate account called as my share capital account. So what I will do here, from share application account, I will transfer the money to my share capital. Share capital being a liability, I need to credit my share capital. Clear? You are getting the money on account of application. That is the reason temporarily I am putting that in the case of your application. But the end use is not the application. The end use is what? I need to use this for my share capital. So I had to credit this to my share capital. If I want to credit this to my share capital, what I have to do? I have to debit my share application, remove from this bucket and put in other bucket called as the equity share capital account. Now, what is that amount there? Same. How much you had received? 3 lakh 60. Then how much I will transfer? Same 3 lakh 60. Done with your first stage. Then comes your allotment. Then what the company will do? The company will do verification. If everything is in order, the company is going to allot. As soon as allotment is happening, I had to recognize income on accrual basis. I need to recognize the income on accrual basis as soon as allotment allotment happens. Why? Because generally we'll tell to the shareholders that shares has been allotted and they are supposed to pay the money within a specified period. But I won't wait for the specified period. I have to recognize the income immediately as soon as the shares are allotted. So ultimately, what is this called as? Income accrued but not received. Income accrued, I have not received. I will receive this at 1 month end or some other date which is specified to the shareholder. So ultimately, that as soon as allotment happens, income will subject to be accrued. So this will be called as what? Income accrued but not received. What is that income? 2 lakhs 70,000. What is 2 lakhs 70,000? It's nothing but your allotment money. So ultimately, share allotment money. Okay, share allotment, whatever money you are having is something called as income accrued but not received. Fundamentally, income accrued but not received is what? Asset. So being an asset, what I have to do? Debit. What is the purpose for this income accrued but not received? So end of the day, I should transfer this to something called as my share capital account. How much? Amounting to 2,70,000. Share capital also remains the same, 2,70,000. Now, if you observe, what is the amount you have credited to your share capital? 6,30,000. 6,30,000. Application money, allotment money. That means what? At this stage, the called up money is something called as 6,30,000. Then what? After the set due date, whatever income which is accrued but not received will be received. So as the money is received, my asset balance is reducing. So ultimately what I will do here, on receipt of income from income due from allotment. So this entry I will pass on receipt of income due from allotment. Cash is getting, you are getting the cash. So ultimately bank account, I will simply debit the bank account. Bank account will be debited. What? You are receiving this money for the purpose of your allotment. Income accrued but not received. Earlier you have debited this. Now you had received that money. So as you are receiving that money, asset is reducing. So ultimately bank account debit to share allotment account credit. So ultimately I have to consider it as what? 2 share allotment account. Amounting to what? I am supposed to receive 2,70,000, received 2,70,000, thereby the amount is said to be closed. Then we are proceeding to the last stage of the transactions. What is the last stage called? I am calling the shareholder. Okay. Initially, I had mentioned in the when I am calling, I will give a detailed description that the shareholder should pay on or before so and so date. So as soon as I call the money, income accrued but not received. So income accrued on what? Income accrued on call. So ultimately, same. Earlier, you are having income accrued but not received in the case of share allotment. Now you are having income accrued but not due, income accrued but not received on something called as work call money. So ultimately, what I will do, same case, share call account will be debited. I will debit my share call account. What I will credit? I need to receive this for the purpose of what? Share capital. So I need to credit my share capital. Amounting to what? Amounting to 2,70,000. 2,70,000. So even here it is 2,70,000 income accrued but not received. So ultimately on the due date you will be receiving. So you have received. So as you are receiving the money, bank account will be debited. Income accrued is received. So I need to debit this. Sorry, I need to credit this. So ultimately bank account will be debited to share call account will be credited. So this is the entry which you are going to pass for the amount of 2,70,000. 2,70,000. That's what is the basic example. Just take this basic example, then we'll slightly add few more things. Okay. In the next example, what we'll do here in this case, let me add one more thing. Issued 90,000 shares at 10 rupees at par. Next, what we'll do in the next case, let us see the company is issuing the shares. Same example will redo based on the condition that the company has issued the shares at premium. Then we'll try to understand what is the accounting impact or the entries which I'm supposed to pass. Clear? So just quickly have a note of this, then we'll proceed to the premium part. Okay, so let us change this example here. X Limited issued 90,000 shares of rupees 10 each at premium of rupees 2 included where in allotment. Okay, premium of rupees 2 included as a part of your allotment. That's what is a given situation. Now, so here basically the thing is what? Premium the shares are being issued at a premium of 2 rupees included. Where the premium is included? It is included as a part of the allotment money. Now included in allotment. Now ultimately when I put an entry for due entry for my allotment, I won't be putting the entry for 3 rupees because now what happens? My value is not 10, 2 rupees extra I had to add. So total I'll be receiving what? 10 plus 2, I'll be receiving something called as 12 rupees will be received. So I'll be receiving 12. What is this 10? This 10 will be transferred to something called as a share capital. And what is this 2? I will call this as something securities premium. So this 2 rupees you are receiving towards securities premium. So ultimately where I am receiving this 2 rupees, this 2 rupees is received along with my allotment money. That's it. Now my first entry will remain the same. Bank account will debit. How much? Now let us also write it here. The same thing if we consider how much? Yeah. No, there is something wrong. Into 2. So ultimately what? 90,000 into 12 total put together I need to receive 90,000 into 12 I need to receive 10,80,000. Share capital 9 lakhs. Securities premium 1,80,000. Total put together 10,80,000. Now we are arranging that in different things. So where the change is happening? Allotment. The change is not all happening in your first entry. The change is not all happening in your second entry. But my third entry, the change should happen. Now, how the change should happen? Earlier, my allotment money was only 2,70,000. 3 rupees. 3 into 90,000, 2 lakh 70. Now my allotment money is what? 3 rupees plus 2 rupees, ultimately 5 rupees. So 5 rupees into 90,000 shares is going to give me 4 lakh 50,000. So I need to consider that extra 1 lakh 80,000 in the scenario. Now what I have to do? Application money, you are receiving what? 2 lakh 70,000, 3 rupees, plus you are also receiving the additional 2 rupees. So total put together how much you have received? 4 lakh 50,000 is the money you had received. 90,000 into 5 rupees per share. Now, is the 2 rupees extra received is my share capital? No. It's called as what? 2 securities premium. I will call this as what? 2 securities premium. So we'll simply call this as what? 2 securities premium. How much? What is the money you are having in securities premium? 90,000 shares. Each share 2 rupees. You are getting that as 1 lakh 80,000. So total put together you are getting it as 5 lakhs. Then this entry will change. Earlier you are receiving only 3. Now how much you are receiving? You are receiving 45,000. So bank account will be debited, share allotment account will be credited. Now the last entry would be the same. There is no change. So ultimately whenever the shares are issued at premium, allotment due entry will change, allotment receipt entry will be changing accordingly. That's what is an illustration where you can discuss what are the entries which are to be passed when the shares are issued at a premium. Now let us see. So after discussing the issue entries regarding par and premium, now let us slightly proceed ahead and we'll make the situation slightly complicated by putting something called as calls in arrears. Say, of course, when I issue the shares to my shareholders, all the shareholders will not be a good shareholder. There may be a few shareholders who had made a default. Now let us consider the issue of shares is happening at 10 rupees each, face value. Let us take the basic example. The issue of shares happen at the face value. Now, so once the issue is happening at face value, ultimately I need to receive 10 lakh 80,000. Why? Because 4 rupees in the terms of application, 36 lakhs, sorry, 3 lakh 60,000, 3 rupees in the terms of allotment, 2 lakh 70,000, 2 lakh 70,000 in the terms of call, and for total amount put together, I had to receive 9 lakhs. It's 9 lakhs. Yeah. So 4 rupees in the terms of application, 3 rupees in the terms of allotment, 3 rupees in the terms of call, total you need to receive 90,000 rupees. I'm just adding one word. Shareholders subscribe to 90,000 shares, of which 2,000 shareholders, of which a shareholder holding what? 2,000 shares. A shareholder holding 2,000 shares failed to pay call money. So 2,000 shares, one shareholder who was holding 2,000 shares failed to pay the call money. That means what? I need to receive call money on 90,000 shares, but I am not receiving on 90,000 shares. How many shares you are receiving? 90,000 you are supposed to receive. 2,000 shares you are not receiving. So ultimately the money is received on what? 88,000 shares. So ultimately, what is this 2,000 called as? Calls in arrears. So ultimately, let us say on this 90,000, how much amount I need to receive in the terms of call? 3 rupees in the terms of call I should receive. So ultimately, I have to receive 2,70,000. But I am not receiving 2,000 into 3 rupees. This is the amount which is not received. So what is the amount which you are receiving? 88,000 into 3 rupees. That's what is the amount which is received. So ultimately 2,64,000 is the money which is received. Now that entry I need to pass. So in this case, as the arrears, the amount is not paid. Where the amount is not paid? Only the amount is not paid in the terms of call. So my first entry remains the same. Second entry remains the same. Third entry also remains the same. And again, let me change this because in this case, you are not issuing at premium, you are issuing at par only. So ultimately, my third entry will also remain the same. But what changes? Fourth entry will also remain the same. What changes? The change is going to be in your call because you are supposed to receive 2,70,000. But how much amount you had received? I am not receiving 2,70,000. I had received only 2,64,000. What about the balance? The balance is something called as what? Calls in arrears. So we'll call this as a calls in arrears account will be debited. So with what? 6,000. How you are getting 6,000? 2,000 shares. One shareholder holding 2,000 shares failed to pay 3 rupees per share. So ultimately you have not received 6,000. You are supposed to receive 2,70,000, but you had not received 6,000. You had received only what? 2,64,000. This is something called as a calls in arrears. So I need to debit this to calls in arrears account should be debited. That's what is the entry which I need to pass for the calls in arrears. Now, as soon as the money is received, ultimately what I will do? I will debit my calls in arrears and I will credit my calls in arrears and I will debit my bank account. Why? Because calls in arrears is something called as our income accrued but not received. As soon as the income is received, bank account will be debited, calls in arrears account will be created. With that, the amount of arrears will be closed. That's what is an example where the primary issue is happening and there is some sort of calls in arrears which is happening. This is the way we'll do some sort of accounting impact. Clear? So just take it down. Then we'll also discuss something called as calls in advance. Then we'll proceed on interest on calls in arrears, interest on calls in advance. So how do we do the accounting impact? With that, I can say the basic part of the company accounts is done. Then we can move on to something called as our war subscription. What is the meaning of war subscription? In such case of war subscription, what we should do? What is the meaning of pro rata? With that, I can say the entire part of issue is set to be done. Then we need to discuss something called as share forfeiture. What is the meaning of share forfeiture cancellation? So once we do the cancellation of the share, what is the accounting entries we need to pass? So once the shares are forfeited and when the shares are again reissued, what sort of entries we need to pass? That's what is something called as a share forfeiture and reissue of the shares. With that, I can say the issue of shares is set to be done. Then we'll try to understand something called as a rights issue, bonus issue. With that, first chapter is almost set to be completed. Then we are having something called as redemption of preference shares and redemption of debentures that we'll see at the later stage. Clear? Now just take it down. Then we'll change this example. There will include something called as calls in advance. So what is the meaning of calls in advance? You are receiving the money in advance. Say at the time of allotment time itself, one shareholder has paid the money for the call. He need to pay that 1 month later or 3 months later. That money has been paid immediately now. I will call that as what? Calls in advance. Clear? So first just take it down. Then we'll proceed on to calls in advance. Then followed by interest on calls in arrears, interest on calls in advance. Then I can say the first basic part is done. Okay, now let us see the case where we are having something called as calls in advance. Now what is the meaning of advance? As I had mentioned earlier, there is one shareholder who was holding 2,000 shares, for example. At the time of allotment itself, he has paid me what? Some money for the call money. That means along with the allotment money, that person had also paid the call money. So that's what is something called as calls received in advance. Now let us try to understand here. One shareholder holding 2,000 shares paid what? Paid call money at time of allotment itself. He has paid the call money. Then ultimately this scenario will be called as what? Calls in advance. Now let us try to see what is the accounting impact which we need to create there. Okay, so now let us see it here, the accounting impact. Okay, 1 second. Right, so first entry will not be changed, bank account will be debited, share application account will be credited. So ultimately 9,000 shares were issued, you are receiving 9,000 rupees. So ultimately there is no change happening in your first entry. Bank account will be debited, share application will be credited. So ultimately 90,000 into 3 rupees, 90,000 into what? 4 rupees per share is going to give you share application money to be received. Then ultimately what happens? Whatever money you are receiving in the terms of application is being transferred to share capital. So ultimately that part is done. Now we are passing a due entry for your share allotment to share capital. Even there is no change in this. So ultimately what happens? This entry is going to change. I am supposed to receive, say, let me change this. I am supposed to receive 2,70,000. But how much you have received? 2,70,000 is received, and you had received something called as 2,000 rupee, 2,000 shares. On this 2,000 shares, that shareholder has to pay 3 rupees for call. that 6,000 rupees when he had paid, instead of paying that at call, that person has paid the entire money when? At the time of allotment itself. So ultimately, I am supposed to receive this, but I am receiving what? 6,000 extra. So total amount received is going to be 2,76,000. So now, what is this 6,000? This 6,000 is something called as two calls in advance. Now, this is my liability. Ultimately, I am liable in the future to adjust this with my call. That's the reason we are creating a liability here. So we are creating something called as two calls in advance. That's what is one additional entry which I need to pass. Now, at the same time, when you get the money for your call, okay, now let me change this because this is not the entry here. You are passing an entry to receive for what? 2,70,000. You are supposed to receive 2,70,000, but what you have done? Already you had received 6,000. Now I need to adjust this. Now, how much amount I will receive? 2,70,000 minus 6,000. This is the balance amount which I am going to receive. So ultimately, calls in advance is adjusted against the calls. Because this particular shareholder had paid 3 rupees in advance. Now what I will do? Till that point arises, I will put that separately under calls in advance. So once the time arises, I will remove that from the calls in advance and I will add that to my share call. So ultimately, that's what is the accounting impact which will be created. That's what is something called as calls in advance. Now, as we have seen, there are two things: interest on calls in arrears, interest on calls in advance. One is a expenditure for the company, another is a income for the company. Calls in arrears, interest on calls in arrears means what? You are my shareholder, you are supposed to pay me the call money, you had made some sort of delay, on that the company will charge some sort of interest. So ultimately, interest on calls in arrears is an what I am charging it from you. Interest on calls in arrears will be income for the company. Now, interest on calls in advance, you paid me some money in advance, so ultimately in return I have to pay you some sort of interest. So interest on calls in advance is going to be considered as your expenditure. Clear? Company is receiving interest on calls in arrears from you, I will consider this as an income. Company is paying interest on calls in advance, that will be considered as my expenses. So interest on calls in arrears is to be considered as an income. Interest on calls in advance is to be considered as an expenditure. That's what is the fundamental we should understand. So just quickly take a note of this. Then we'll proceed and discuss on the treatment of something called as interest on calls in arrears, interest on calls in advance. With that, I can say the first part is done. Then we can move on to something called as our over subscription. Okay, so now let us see something called as we have discussed, the accounting impact of calls interest on calls in arrears. You are supposed to pay me money, you are not paid. For that, there is a delay happening. So what the company is doing, I am charging some sort of interest from you. So interest on calls in arrears is always to be considered as the income from the company's point of view. Now, interest on calls in advance. So you had paid me some sort of money in advance. On that, I am supposed to pay you some sort of interest to you. That means from the company's point of view, interest on calls in advance is going to be called as the expenses. So interest on calls in arrears is an income. Interest on calls in advance is going to be called as my expenses. That's what is something which we need to record. Interest on calls in arrears is an income. And fundamentally, what is the accounting entry I have to pass? All incomes are credit. So I need to credit something called as to interest on calls in arrears. When I will credit, when I receive this amount, I will credit. So as you are getting cash, bank account will be debited, calls in arrears account will be, interest on calls in arrears account will be credited. So that entry I need to pass. Bank account debit to income, interest on calls in arrears. So I need to debit interest on calls in arrears. So if I debit the interest on calls, crediting the interest on calls in arrears, why I'm crediting? Because all the expenses are debit, all the incomes are credit. This being an income, we are crediting it. So whatever amount you receive, that I need to consider as bank, and I need to credit that to your interest on calls in arrears. This at the end of the financial year, I had to transfer this to your profit and loss account. Interest on calls in arrears account debit to P&L account. That's it. Now, then what happens? Then let us discuss this is what? This is nothing but for your interest on calls in arrears. Now let us see, in the case of interest on calls in advance, what is the transactions, what is the entries which we need to record. Let us see. Okay. Now, interest on calls in advance. What is this called as? This is nothing but your expenses. So all the expenses fundamentally are the debit balance. So what I will do? Interest on calls in advance account debit. As you are making an payment to bank, whatever amount of interest you pay, that I will consider it as my expenses and debit to interest on calls in advance, and I will credit my bank account because the amount is paid. Then at the end of the year, what I need to do? I need to transfer this to my profit and loss account. Being an expenses, I need to charge this to my profit and loss account to interest on calls in advance. That's it. That's it. So these are the two entries which we need to pass. Now, clear? So just take these two entries. Then what we'll do, before proceeding to the further topic, let us take a small case. See, till now we have seen issue separately, arrears separately, advance separately. Now what we'll do, before going to the next topic, one example we'll consider. In the same example, we'll try to see there are few calls in advance is there, and there is few calls in arrears is also there. Then we'll try to record all the entries for that example, so that we'll get a clarity of everything what we have discussed so far. Then that becomes easy for us to move on to the next topic, which is nothing but your over subscription. Clear? So just quickly take a note of this. Okay, so now let us see. Say ABC Limited issued 1 lakh. ABC Limited issued 1 lakh equity shares. ABC Limited issued 1 lakh equity shares, face value rupees 10 each. So now in this example, let us consider the issue is happening at par. So now 1 lakh equity shares were issued. Now what is the breakup? With a breakup that 10 rupees in the terms of application, 10 rupees in the terms of allotment, 10 rupees in the terms of call. Now let us see, application money you need to pay, the company is asking you to pay. Let us consider it to be 2 rupees. You are supposed to pay to the company 2 rupees application money. Then the company is asking you to pay as a part of allotment money 4 rupees. Now let us consider the company is calling two calls. First call. See, in the earlier example, we have seen the entire call money was received in one single go. Now let us consider there are two types of call: first call and second call. Now the total face value of the share is what? The total face value of the share is 10 rupees. I had received 6. Now what I will do? 2 rupees will be received in the terms of first call, 2 rupees will be received in the terms of second call. So ultimately, or let us take a stand that 3 rupees in the terms of first call, 1 rupee in the terms of your second call. So ultimately, the total amount is going to be 10 rupees per share. That's what is the breakup. Now, let us consider the situation where Mr. A, okay, Mr. A shareholder, Mr. A shareholder holding 2500 shares. Mr. A shareholder holding 2500 shares, failed to pay what? Allotment money. Okay, failed to pay both call money. That means he is not paid, he has not paid even the allotment money of 4 rupees, he has not paid the first call money, he has not paid the second call money. That means he has paid only what? Application money, only 2 rupees has been paid. Okay, that's what is something called as Mr. A is the first transaction. Then let us consider Mr. B is also a shareholder. Mr. B a shareholder holding 3500 shares, 3500 shares, paid first call and second call when at the time of allotment. Okay, at the time of allotment itself, this person has paid you the entire call money. He has paid on the first call, he has also paid the call money on the second call. So ultimately the total amount is paid at the allotment stage itself. This is what is the given situation. So we need to generalize the transactions in the books of the company. Now let us start doing this. Now what is my first entry? My first entry in this case will be, as I am receiving an application money, let us debit your bank account will be debited. What I will credit? What is the purpose for receiving? You are receiving this for the purpose of your share application account. So bank account will be debited, share application account will be credited. Now with what? 1 lakh shares was issued. 1 lakh shares. Of each share, application money is what? 2 rupees. So ultimately the shareholders are paying 2 rupees on the application. So ultimately I had received 2 lakhs in the terms of my application money. So ultimately whatever money which you are receiving, that is towards your share application. So what I need to do? Share application account now have to be debited. Where I have to transfer? Share capital account I have to transfer. Share application account I will debit. This will be transferred to your share capital account. So now what is the amount? 2 lakhs is the amount which is there in the application account, that you simply transfer that to the share capital account. Now there is a capital which is lying in the share capital account as 2 lakhs. Now then what? Then what is the next stage? Allotment. So as soon as the applications are received, the company is doing the checking the KYC and checking whether applications are duly filled. If everything is in order, allotment will happen. So as soon as the allotment happens, we need to record the entry as what? Income accrued but not received. So ultimately, what is that income? Share allotment account. Share allotment account is nothing but the income which is due but not received. To what? This is towards your share capital. So ultimately, what happens? How many shares? 1 lakh shares. What is the value which I will receive per allotment? 4 rupees. So I should receive 4 lakhs. And I will transfer that amount to where? Share cap. That's what is the entry which you are passing for the income accrued but not received in the case of your allotment. Then finally you are receiving the money. Now here we have to be slightly careful. Why? Because there are two things. One, there is a calls in advance, there is calls in arrears. Now let us do the recording for this. Let us do the calculations of amount received and not received, then we'll record the journal entry in the particular scenario. Now let us see. Here 2500, a person holding 2500 shares failed to pay the allotment money. That means how much amount he should pay? 4 rupees he should pay. Not paid. So 10,000 has not been received. So ultimately 10,000 you have not received. See how much you are supposed to receive? You are supposed to receive 4 lakhs, of which 10,000 is not received, which is nothing but your due. I will consider it as a due, so not received. So as you are not receiving 10,000, ultimately you have received what? 3 lakhs 90,000 is the amount received. Amount received towards what? Towards allotment is nothing but 3 lakh 90,000. But not only this, there is one person called as Mr. B. What Mr. B has done? Mr. B has to pay allotment money. He paid that. But along with that, he had paid some extra. What is that extra? First call money he had paid, second call money he has paid. That means he is paying me 4 rupees anyways he has to pay. He is paying me this 3 rupees and he is also paying me this 1 rupee. So total 8 rupees has been paid. So of this 8, 4 rupees is for the allotment. 8 rupees is for what? Advance. So ultimately, I need to charge this as what? First call and second call. Let us see. First call. What is the amount in terms of first call? 3,500 into 3. 10,500 is the amount received in advance. Then 3,500 into 1. So total amount is what? 14,000. 3,500 into 4, that gives you 14,000. So the breakup of this is what? First call 10,500, second call 3,500. So ultimately this entire 14,000 is said to be called as calls in advance. So end of the day, How much amount was received? Towards allotment, you are receiving 3,90,000. Towards the call, you have received 10,500. Towards the second call, you have received 10,500. So total bank amount you are receiving is 4 lakhs, 4 lakhs, 4,000. Clear? Again, 4 lakhs is the money which you are supposed to receive on the allotment. There are 2,500 shareholders who has failed to pay the allotment money. So 4 rupees is not received. So ultimately, I had received 3,90,000. Not only 3,90,000, another 4 rupees extra. 4 rupees extra in the terms of my first call and second call. So 3,500 into 3, 3,500 into 1, that is going to give me total amounting to 4,04,000 we had received. Now, I need to segregate. I cannot transfer this entire 4,40,000 to my what? Allotment. What I will do? 2 share allotment. So how much I will transfer? Only I'll be transferring the amount of your allotment. 4 lakhs only will be transferred. What about the remaining balance? The remaining balance includes something called as we have discussed earlier, calls in advance is a liability. So I need to consider calls in advance here. What is the calls in advance? There are two parts there. 10,500 towards the first call, 3,500 towards the second call. So total amount is nothing but 14,000 is nothing but the calls in advance. Now, if you look into the credit balance, you are getting 4,14,000, but here you are getting what? 4 lakhs. There is a difference of 10,000. What is that? That is nothing but your allotment money due. Now, we need to understand one simple thing. If the outstanding money is called, I can call that as a calls in arrears. Now, this is not call. So what I will do, I'll simply reduce my allotment. Share allotment account will be debited. Earlier you are crediting with what? 4 lakhs. Now of the 10,000 is not received. So what I have to consider? My allotment money has to be reduced by 3,90,000. So as I already had credited, now what I will do? The differential of 10,000 now I will debit. So ultimately what? 4 lakhs minus 10,000, your allotment account is having 3,90,000. Thereby what happens? Your debit total is 4,14,000, credit total is also 4,14,000. That's what is the entry which I need to pass for your share allotment money due, and there is also something called as calls in advance. Now this part is done. Then it is a due of your share first call. So ultimately income accrued but not due, sorry, income accrued but not received. Share first call account I will debit. Share first call account will be debited to what? To share capital account will be credited. Share first call account will be debited to share capital account will be credited. With what? What is the amount you are supposed to receive? 1 lakh shares. 1 lakh shares at 3 rupees each. So ultimately 3 lakhs is the amount which I should receive. Because I don't know how much I will receive or whether I won't receive anything, I don't know. Just I am having income to be received 3 lakhs that we have recorded. Now let us pass the other entry here. Now what happens? Receivable is happening. You are getting bank account. Okay, bank account will be debited. And what account will be credited? Bank account you are going to debit, and you are going to credit something called as share first call account. I need to credit my share first call account has to be credited. That's what is the entry which I need to pass. Entry is simple, but calculation is supposed to be done properly. Now let us go here. Let us come here. Okay, so you call this as your working note number 1. Now you call this as a part of your working note number 2. What is your working note number 2? Calls. Now, what is the call money to be received? I need to receive 3 lakhs. Okay, I need to receive 3 lakhs rupees. But it is mentioned 2,500 failed to pay both the call. So I am not going to receive 3 rupees on this call. So I won't receive. Now, already I had received 10,500 in advance. So I won't receive even this 10,500. So now ultimately this is nothing but your calls in arrears which you are supposed to receive but not received is something called as calls in arrears. This 10,500 was in advance earlier. Now I am going to adjust this. That's the reason this amount I need not receive. I will not receive because already you had paid me 10,500. Now what I need to do? I am putting that as a part of advance. Now the 10,500 from your advance accounts, if you see here, calls in advance account there is 14,000. Now what I have to do from the 14,000, 10,500 I have to put that from calls in advance to something called as a share first call account. That's it. Now again, 3 lakhs is the amount which you are supposed to receive. 2,500 shares has not paid the call money of 3 rupees. So 7,500 is not received. 10,500 already received. Now I won't receive this. So ultimately the amount received is 3,000 minus 7,500 minus 10,500 is nothing but the call money received. So you are receiving this amount. So when you receive this amount, what entry you have to pass? Bank account debit to what? Share first call account. Now, okay, let us see here. What is the amount you are receiving? You are receiving 2,82,000. How much amount you are supposed to receive? 3 lakhs. Why you are not receiving this? So ultimately the difference is of 2. 1 is what? Earlier I was having some sort of advance money which is my liability. Now what I am doing? I am adjusting this. So ultimately calls in advance I need to adjust. So what I will do? I will debit my calls in advance with what? With in terms of your first call. So 10,500. Now what? You are supposed to receive 3 lakhs. But what is the total coming to? 2,90,500. Means what? There is also something called as calls in arrears. I am supposed to receive 7,500, but I had not received 7,500. So I will call this as what? Calls in arrears account will be debited. So ultimately the total is what? 3 lakhs. I need to receive 3 lakhs. Received only 2,80,000 because I had already received this 10,500. Now I should transfer this to my call account. I have not received this 7,500 that I am putting separately as something called as work calls in arrears. So that's what is the entry for your share first call. Now similar set of transactions will happen for your share second call account as well. Now let us see. Share second call. Let us see. Second call to share capital. How much money? 1 lakh into 1 rupee per share. 1 rupee per share, total I need to receive 1 lakh. Total amount to be received is 1 lakh. But now what is happening? Let us put this as your working note number 3. What is your working note number 3? You are supposed to receive 1 lakh, of which 2,500 shareholder holding 2,500 failed to pay the allotment money, failed to pay the first call money, failed to pay the second call money of 1 rupee. So this 2,500 is something called as what? Calls in arrears. Now already I had received 3,500 in terms of advance. So I will call this as what? Calls in advance. So calls in advance is going to be this. So ultimately how much amount you have received? 1 lakh minus 2,500 minus 3,500 is going to give you 94,000. So ultimately what? Let us pass an entry here. Bank account will be debited, okay, to what? To share second call account. To share second call account. Then ultimately how much amount I need to receive? 1 lakh is the money which I need to receive. But how much amount you are receiving? You are receiving only 94,000. Why you are receiving only 94,000? Already there was a calls in advance. Now what is the amount of calls in advance? Already this 3,500 is received earlier. So I'm not going to receive this 3,500 again. So ultimately that is the reason. Now if you observe, calls in advance originally was 14. You had reduced with 10,500. Now you had reduced this with 3,500. So what is the total? 14,000. Calls in advance become 0. So ultimately you are supposed to receive what? 2,500 shares into 1 rupee, which you have not received, that you are transferring to calls in arrears. So thereby the amount is this. So these are the entries which you are supposed to pass in the present problem. Okay, so just quickly take a note of these entries, finish this problem, because this problem is basic explanation which is going to give you the complete clarity of what we have discussed so far. Clear? So just take it down, then we'll discuss on something called as war subscription and what is the meaning of pro rata. In the case of your war subscription, what is the transaction which we need to do? That we'll see one example. Then we'll try to discuss something called as a share forfeiture. What is the meaning of share forfeiture? What is the meaning of reissue? With that, I can say the theoretical part of issue of shares is done. Then we can start working with your problems. Okay, so now let us look into something called as over subscription. What is the meaning of over subscription? Okay, then what is the accounting impact of something called as over subscription? Let us see. See, what is the meaning of over subscription? The company has invited applications for 1 lakh, but I had received an applications for 1 lakh 20,000, more than what I had invited. So, getting applications for more than getting applications for more than invited, that situation is said to be called as over subscription. Let us take an example. Invited 1 lakh, applications received how much? 1 lakh 20,000. So ultimately, what is this 20,000? That 20,000 is said to be called as over subscription. Let me put it like this: over subscription. So this is said to be called as for over subscription. Clear? Getting applications for more than what you are supposed to receive is something called as, you are inviting something, you are getting more than that. Ultimately, that difference is said to be called as over subscription. And when we are discussing the earlier basics, there one point we had understood. What is that? You will be receiving the money, application money, along with the applications. So you had received application money on 1,20,000, but I can't allot to 1,20,000. I had to allot only to 1 lakh. So what I had to do? Refund. So whatever excess money which I am taking has to be refunded back to the shareholders. That's what is something called as refund. Now here there will be something called as pro rata. That means what? I will be allotting the total shares of 1 lakh. But how do I do? 1,20,000 shares were applications were received. Of this, allotment were happening for 1 lakh. Proportionate. So the allotment will happen on the proportionate manner. Then I will call that as a pro rata. So here, now, whenever there is a situation of over subscription, there what? Allotment will happen. Will happen on pro rata basis. On the pro rata basis, the allotment is going to happen. That's what is happening for your over subscription cases. You are getting applications, inviting applications for 1 lakh, but you got an applications for 1,20,000. You had received the application money. Now allotment cannot happen to 1,20,000. Allotment will happen to only 1 lakh. How I will do? Proportionate. I had to apply that on a proportionate basis. Allotment will happen on the proportionate basis, something called as our pro rata. Say suppose, let us consider there is a shareholder called as A. Mr. A being a shareholder. Let us consider shareholder. This person has applied 1,000. Okay, applied. This shareholder had sent an application for how many shares? 1,000 shares. But as the allotment is happening on pro rata basis, he will not be allotted to 1,000. I need to calculate that on a pro rata basis. Proportionate means what I will do. Of 1,20,000 applications, allotment is for 1 lakh. So applications received 1,20,000, allotted is 1 lakh. Now ultimately this person has made an applications of 1 lakh. How many shares will be allotted? So proportionately we need to calculate the number of shares allotted. So here let us try to find out number of shares to be allotted. Now let us see. Applications 1,20,000. Allotted 1 lakh. So 1,20,000 allotted is 1 lakh. Now this is what? Applied. And this is what? Allotted. This person has applied for 1,000. Applied. How many shares I will allot? Proportionately. That means what I will do? 1,000 into 1 lakh divided by 12,000, 1,20,000. So what we are going to do here? 1,000 into 1 lakh divided by 1,20,000 is going to give you a pro rata. So I will be allotting him only 833 shares. That's what is something called as the allotment happening in pro rata basis. Now let us consider here In this case, let us modify this case here. Let us consider application money. Okay, let me put it like this: application allotment, and let us call, so 3 rupees, 4 rupees, 3 rupees. So total face value being 10 rupees. So now what happened? Company should receive applications for 1 lakh, but it has received applications for 1 lakh 20,000. That means I had got some money extra on this 20,000. Two possibilities. Now the company can refund this 20,000 into 3 rupees to the shareholders, or adjust. I can adjust because I am allotting the shares to you. All the people on the pro rata basis, the allotment happened. Okay, none of the shares were rejected. So as you had applied for 1 lakh 20 to all the people, as we have seen for A, the company has allotted the 1 lakh shares. Then ultimately, whatever money which I am receiving will be there in excess for all the shareholders. Now what I have to do? This excess money should be adjusted against your subsequent. Now we need to, whenever there is a over subscription, we need to prepare a table. What table? Let us say application. Okay, application means what? Here what we are trying to consider, we are trying to consider amount of application money to be received, only to be received, not received, to be received we are considering. Now what is the application money which I have to receive? 1 lakh into 3 rupees per share, so I need to receive 3 lakhs. Now I need to receive 3 lakhs, but what happened? Application money received. What is the application money received? You have received the application money on 1,20,000 shares into 3. You had received 3,60,000. So ultimately, what is this called as? Excess application. What I need to do? Adjust against what? Allotment and call. I need to adjust. That's what is nothing but your next column. So the next column is nothing but the difference between your application money received and application money received and application money to be received. Excess 60,000 is received. Now let us consider share. Okay, share allotment money. So what is the allotment money which you are supposed to receive? Allotted is only for 1 lakh on the pro rata basis. So 1 lakh into what we are doing? 4 rupees. So I need to receive 4 lakhs. But excess money 60,000 is there. So how much amount I will receive? Application, allotment money to be received is what? Total amount is what? 4 lakhs. Of this excess money, I am telling my shareholders that I will adjust. So I will be receiving only this much, 3,40,000. Allotment money to be received is going to be this. That's what is the first and foremost thing which I need to prepare. So here we need to prepare the table. Application money to be received, application money received, excess application money adjusted against allotment and call, share allotment money, what is the amount which you are supposed to receive, what is the actual amount, after adjusting what will be the amount which you are going to receive. So this table we need to prepare. Once this table is done, accounting part will quite become easy. Now let us try to understand the accounting part here. Okay, so this as an example I had mentioned for your pro rata. That's not at all going to affect my problem. So this will discuss whenever the problem of this sort of situation comes, we'll try to discuss the implication of your pro rata. Now first entry, bank account debit to what? Share application. What is the amount you are receiving there? 1,20,000 shares into 3 rupees, you had received 3,60,000. Entire amount of 3,60,000 will be transferred to my share application account. Now what will happen? Share application account, I will debit. This will be transferred to something called as my share capital. I had not done the allotment for this 3,60,000. I had made an allotment for all. Sorry, I had not made the allotment for 1 lakh, 1,20,000. I had made the allotment for only 1 lakh. So only I can transfer 1 lakh into 3 rupees to my share capital account. Remaining excess of 60,000 will be kept in something called as share share allotment account. So I will put this in my share allotment account. Now that's what is the first entry which I have to pass. Then comes your share allotment. Share allotment account debit to share capital. Share allotment account debit to share capital. Now what is your share allotment money? I need to receive on 1 lakh shares, I need to receive 4 rupees per share. 4 lakhs is my share allotment money. So I should transfer 4 lakhs to my share capital. But if you observe, 4 lakhs is the amount which you have to receive. But already you have debited what? Credited debited share allotment here. So ultimately, now let us see here what is happening. So, okay, let me change this entry here. This entry should be here, not a debit. This should be credit. So ultimately, what we'll do, let me change this entry. So here, to share allotment account. So to share allotment account, what we are doing, I am crediting 60,000. Now what I have done, I had debited 40,000. So 40,000 minus 60,000, the impact is what? 3,40,000. So I will receive only 3,40,000. With that, my allotment account is closed again. Suppose receive 4 lakhs, but excess received, you are already credited to your allotment account. So ultimately, what? 60,000 was credited, 4 lakhs was debited. Net impact is what? 3,40,000. Now what you will do? You are going to receive bank account will be debited to share allotment account will be credited with what? 3,40,000. So 3,40,000 is the money which you are receiving. Last two entries will be the same. There is no change. What? Share first call account will be debited. Share call account will be debited to share capital account. As in this example, there is no calls in areas. You are receiving the entire money. So what will do? Bank account will be debited to share call account. With this, all the entries will be closed. You just try to pass the last two entries. So with this, we have discussed the concept of war subscription as well as the prorata. We'll do few problems based upon this once we finish off the entire critical concept. Now, just take this off. So if this is clear, we'll move on to something called as share forfeiture. When shares are issued at par, when shares are issued at premium, and premium is not received. Shares are issued at premium when premium is received. So what are the entries which I need to pass for the share forfeiture? What are the entries which I need to pass for the reissue? This will try to understand. Clear? Just quickly take this down so that we'll finish that. With that, what will happen? The entire theoretical part of issue of shares is done. So we can start working with the problems. Okay, share forfeiture. What is the meaning of share forfeiture? Share cancellation of shares held by the shareholders is something called as share forfeiture. Any person who is called a shareholder, if he fails to pay any sort of allotment money or call money or anything, the board of directors can pass a resolution and they can cancel. So once the shares are cancelled, whatever money taken from the shareholder will not be given back to the shareholder. And once the shares are cancelled, those shares can be reissued again to some other shareholder. That's what is something called a share forfeiture and reissue of shares which are forfeited. We'll discuss ratio of shares forfeited. We will discuss in short while. First, let us focus on the accounting impact of your share forfeiture. Ultimately, what you are doing, capital you are cancelling. As capital is being shown as your liability, the liability is being cancelled. I have to debit my liability. So that's the reason what I will do. Simply share capital account will be debited. Then what you are doing? Why you are cancelling? Because you are failed to pay me the allotment money. You had failed to pay me the call money. That's the reason I am going for forfeiture to calls in arrears. Then, as I said, whatever money which you paid me, I won't give you. That's what is nothing but will be transferred to share forfeiture. Suppose, let us take an example for this. 10 rupees is the face value. Let us consider 6 rupees received, 4 rupees not received. 4 rupees, let us consider calls in arrears. Clear? Let us take an example of this. Then ultimately what happens? As the 4 rupees is not paid, board of directors send a notice to the shareholder. Even after sending the repeated notice, the shareholder has not responded. Then the board of directors decided to forfeit the shares. So as the board of directors decided to forfeit the shares, I need to cancel. So first what I have to consider, whatever capital called, how much amount I had called? 6 rupees already received, 4 rupees also called. So I had called to the extent of 10 rupees. So ultimately what I have to consider here, share capital account I need to debit. Share capital account should be debited. I need to debit share capital account to the extent called. Here in the present case I had called the entire 10 rupees. So suppose I had not called the entire 10, I had called only 6. 4 rupees is not called, so I cannot cancel the entire 10. I had to cancel only the money which has been called up. Now here I'll be considering what? Called up is 6, sorry, called up is 10, I will consider it. Then why I am cancelling? Because you had failed to pay something called as 4 rupees. That is the reason I am going to cancel. And whatever amount you had already paid, I am not going to refund. So this is my capital profit. So what I will do, this will be transferred to something called as to share forfeiture account. Being a capital profit, I will transfer this to share forfeiture account. That's what is the entry which will be happening when the shares are forfeited. And what is this case? The issue is happening at par, then you are doing some sort of forfeiture. Now, as I had explained earlier, whenever the issue is happening at premium, then we have to be slightly careful, because two cases arises. Premium receives, my transaction is something, my account treatment is something. Premium not received, my account treatment is going to something. Why? Because whenever the premium is received, as per Companies Act, though that premium has to be used only for the specific purpose. Debiting that means what? Using the premium. So whenever I am doing a forfeiture, see, when you receive the premium, what you are doing? You are creating your premium. Now once I forfeit, I am debiting my premium there. So debiting the premium amounts to utilization of the premium. So as the premium is received, I cannot debit as per Companies Act. That's the reason we have to be careful in every problem where the forfeiture is involved. You have to observe whether the premium money is received. If premium money is received, the premium cannot be reversed. Premium money not received, whatever entry which had passed in accrued, that entire amount of premium can be reduced. Now let us take a small example here. Let us take a situation where the company has issued 10,000 shares. Same case, company has issued 10,000 shares, 12 rupees, 2 rupees premium. Let us consider 10 rupees the issue price, 2 rupees the premium. The 2 rupees is included in the allotment. Okay, 2 rupees is included in the part of your allotment. Now 2 rupees include as a part of your allotment. Now what is your application money? Application money, let us consider that to be 2 rupees. Allotment money, let us consider that to be 3 rupees plus premium 2. Total put together coming to 5. Now let us take the balance is nothing but your call. What is the balance coming? So 10 rupees of that, 1 second, 10 rupees of the 2 rupees nothing but your application money, and 3 rupees nothing but your call money. So ultimately 5 rupees nothing but my call money. So ultimately 2 rupees your application, 3 rupees your call, 5 rupees, sorry, 2 rupees your application, 5 rupees nothing, 3 rupees your allotment, and 5 rupees is going to be your call money. Now allotment money, I am receiving a premium also, I should receive 5 rupees. Now let us take a case for this example, two cases where premium money is received, where premium money is not received. What is the meaning of this? Premium money received means there is no failure in your allotment, because it is mentioned that premium is received along with the allotment. Whenever the shareholder pays the allotment money, what he is doing? He is paying the premium also. Premium money is received. So then ultimately I cannot debit securities premium. Let us see. Let us consider in the first example, shareholder failed to pay call. Shareholder failed to pay the call money. Shareholder holding, let us consider 1000 shares, failed to pay the call money. Means paid the allotment money. Once he paid the allotment money, what? Premium is received. So once the premium is received, I'll be considering it as a first case. So as the premium is received, say, okay, let us pass the due entry. At the time of allotment, what entry will pass? Share allotment account will be debited to share capital to security premium. You had passed this entry. Okay, clear? So what is that entry there? 10,000 shares total. How much money you are receiving in the terms of allotment? 5 rupees. What is the breakup for this? Breakup for this, 3 rupees is nothing but my allotment, will be going to share capital. Then 2 rupees will be going to my securities premium. So ultimately that's what is the entry which had passed. Now I had received that. So as I had received the premium money, I cannot debit this because 20,000 is already credited. If I debit, what is the meaning of this? Debiting of your security premium amounting to using your security premium. I cannot use the security premium for any purpose other than the things which are specified by the Companies Act. So here I am not allowed to debit my securities premium. So I can't debit as the premium is received. So what I have to do? I have to simply consider share capital account. What? To the extent called without including the securities premium. That means what? How many shares I am going to forfeit? 1000. What is the amount called? Excluding premium? 10. Okay, 10 rupees the amount called. So why I had called this? 2. Something called as calls in arrears. How much amount my shareholder has to pay me? On this 1000 shares, he is supposed to pay me the call money of 5. So he is supposed to pay me 5000. How much amount he has paid? He has paid me what? He has paid me something called as my application money. He has paid me something called as my allotment money. Total amount he has paid me 5 rupees. So total to what? To it's nothing but your share forfeiture. Whatever amount I received which will not be given, so ultimately that will be transferred to share forfeiture account. So here what is the amount I had received? 1000 shares. I had received application money 2. I had received application money amounting to 2, and I had also received the allotment money amounting to 3. So we had received 5000. And what is the calls in arrears? 1000 shares. I had not received 5. So ultimately this is nothing but my arrears. So this what is the thing which I had to credit to my share forfeiture account. That's what is the entry which I should pass when if premium is received. So once the premium is received, I should not debit the securities premium account. Now let us see if premium is not received. Premium is not received. You are not received the premium. Then what? I can credit my premium. I can debit my premium. Premium received, I should not debit. Once the premium is received, I can debit. Now what entry I will pass? Share capital account I will debit. What with what? Amount called up. So what is the amount called up? 1000 shares on this 10 rupees is called up. Now as the premium is not received, I can credit my securities premium. Now as the premium is not received on the 1000 shares, 2 rupees is not received. What I have to do? I have to debit my securities premium. Then what I am supposed to do? 2. What? 2. Why I am going to cancel? Because you failed me to pay the allotment money. See, failure premium not received. Let me come back to this. Premium not received is nothing but failure even in allotment. So failure even in allotment, then only I can call that as premium not received. So here calls in arrears. How much amount I have to receive there? I have to receive on 1000 shares allotment money including premium. Total put together I have to receive 5. Okay, not only that, I am also supposed to receive another 5 regarding my calls in arrears. I mean my call. So total amount which I should receive is nothing but 10,000 rupees is the total I am supposed to receive, which is not received. Then ultimately whatever amount which I had received, I am not going to give it you back. So ultimately what we'll call that as? We'll call that as something to share forfeiture. How much you had received? Only had received the application money. So 1000 rupees you had received only 2 rupees, so total put together 2000. So there's nothing but the entries which I am supposed to pass for your share forfeiture. Shares issued at par, shares issued at premium. 2 scenarios exist. Premium not received, very simple, I can debit my premium. Once the premium is received, I cannot debit my premium. So that's what is one precautionary measure we have to consider when we deal with the reissue. I mean, we deal with the forfeiture. Now just quickly take this down. Then we'll proceed and try to see what is something called as reissue of the shares forfeited. With that, this theoretical concepts will be closed. Okay. Okay, the accounting impact of reissue of shares is very simple. You had cancelled earlier, now again you are reissuing, so what you are getting bank to what? To share capital. So ultimately earlier when we have credited, when we had cancelled the share, there is a balance lying in your share forfeiture account. So what I have to do? Share forfeiture account has to be debited to the extent of reissue. Then finally, whatever balance you are having in the share forfeiture account should be transferred to capital. So the concept is very simple. What we'll do, anyways, we'll be starting working the problems in the next video so that you can understand how the forfeiture happens and how the reissue happens. Clear? So with this, I can say the concept, the theoretical concept in the case of issue of shares is done. So what I'm planning to do, so we'll do the problems from your CMA material only. So there are nearly, I guess, some 11 or 12 problems are there. So I'll be discussing, I'll be clearly demonstrating how to at least 5 to 6 problems I will try to explain. So remaining problems, I advise you to go through the remaining other problems. So of the 12, I'll be covering at least 5 to 6. Okay. So then what? Then immediately we can go to rights issue. It's a small topic. So rights issue, bonus issue. These two things are very pretty much small topics that we'll be trying to cover. Clear?